Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Arizona Sonoran Copper, traded on the TSX under the ticker ASCU and on the OTCQX under the ticker ASCUF. And I'm joined today with the president and CEO of Arizona Sonoran Copper, George Ogilvie. And George, it's great to get you back on the show. We just chatted back in May, kind of recapping a lot of the work the team had done and some of the economic study that you'd put out in February. And you put out a big news release just earlier this week highlighting that you now have a combined resource estimate at your Cactus Project of 7.3 billion pounds of copper in the measured and indicated category and another 3.8 billion pounds of copper in the inferred. And you've got an updated model now that brings Parks-Salyer in as a proposed open pit. So I'm going to turn it over to you just to walk us through the key highlights, but this is a big news event and a key milestone for the company, so congrats to the team.
Hey, many thanks, Shad. Appreciate it. Yeah, no, it's very good news for the company and the shareholders. The acquisition of the MainSpring property and the ability to drill that out starting late last year has added in about an additional 1.9 billion pounds of copper over and above the previous resource that we put out in November of 2023. And because we're able to mine MainSpring as an open pit, and that's using a copper price of $3.75 a pound, which is what we're running the reserve or the resource pit shells on, it allows us to mine MainSpring as an economically viable open pit. And because MainSpring essentially is the same ore body as Parks-Salyer, when we get down to Parks-Salyer, as opposed to mining it as a sub-level cave, which we were looking at within our PFS that we put out in February, we're now able to mine Parks-Salyer as an open pit as well. So what that means is that for underground sub-level cave mining, we were using $27 a short ton for our mining costs. Because now we're looking at a mining cost of under $3 a ton for open pit mining, it means that we can lower our cutoff grade. And with a lower cutoff grade, it means we can bring in more mineralization to the resource at Parks-Salyer. So that brings in another 1.5 billion pounds of copper combined with the 1.9 billion pounds of new copper that we're bringing in from the MainSpring property. And that's, in a nutshell, how we arrive at 11 billion pounds of copper versus the 7.4 billion that we were reporting, literally, 8-9 months ago. So it's great news for the shareholders of the company.
Yeah, George, and I want to kind of dive into that a little bit further because to the point you made and you highlighted here in this news release, it's a 1,904% increase in the measured category with the inclusion of this mineral from Parks-Salyer that before, when you were looking at doing the underground mining method, some of that material wasn't going to be included. Now it is, but also it sets up an interesting scenario where you have an enlarged pit here, and as you go through MainSpring down into Parks-Salyer, we talked about this a little bit last time, that it gives you optionality. You have the option, if you wanted to, after that, to then eventually go underground, but instead of building a big decline down into the earth, you've actually mined your way down through it to the open pit. So maybe just explain how it gives you that optionality and better efficiencies.
Yeah, well, in the pre-feasibility study that we put out with only having Parks-Salyer, no MainSpring at that time, the only way we could access Parks-Salyer was with a twin decline coming down from surface. It took 18 to 24 months to develop that, get into the first top levels of the cave and start the caving process. And that was about $107 million US. Some of it was upfront capital, some of it was sustaining capital. And then probably more importantly, over the 20-year mine life that we were envisaging for Parks-Salyer in the PFS, we had close to $800 million of sustaining capital that needed to go into that mine. So think about an underground mine. You have to drive the ramp, all the way down to the bottom of the deposit. You've got to come in every 100, 150 feet, 200 feet, whatever your incremental level is with your levels, put in your footwall drifts, your ore pass, your waste pass, your ventilation raises. Think about all the ground support that has to go into an underground mine. Now, with open pit mining, we won't have to put in that same degree of capital development to an open pit as per the PFS at Parks-Salyer. So it's going to have huge positive ramifications for the economics of the project when we come out with a PEA probably in the next 2 to 3 weeks, advising the market of our new plan going forward with the inclusion of MainSpring as an open pit and now looking at Parks-Salyer as an open pit.
Yeah, so we're definitely going to look forward to that upcoming PEA that wraps some economics around this and kind of the new thinking around it. Let's layer on one other element here, though, George, and that is you have partnered with Rio Tinto on their Newton technology, and there will be even further economic reports coming out probably next year, layering in another potential way to extract things more efficiently. Maybe just share how that's even another layer of optionality.
Well, when the PEA results come out, which essentially will be a standalone plan, I think the market's going to see that we have a very robust, world-class project with world-class economics, and we certainly can stand on our own 2 feet. But as everybody knows, the holy grail for junior miners is obviously ensuring that they can do project financing and actually execute on the project. So we are busy with our phase 2 column tests with Newton. If those prove successful over the course of the next 6 to 9 months, after we complete this PEA, we will be embarking on a pre-feasibility study, and that will include Newton. And if Newton is able to satisfy the technical triggers of, the proper recoveries from the laboratory tests and meet the financial and economic triggers, then they would have the ability to earn into the project potentially up to a maximum of 40%. And certainly, as a junior company, having one of the largest mining companies in the world in our corner, certainly from a project financing perspective, that could be hugely advantageous for us. And I can certainly guarantee you that if Newton is going to go ahead on this project, it will get built and it will get executed upon, and this mine will go into commercial production sometime within the next 3 years, which is a relatively short period of time for certainly a copper mine now of this size and scale.
Absolutely. I mean, I think the concern when people look around the globe at all the other copper projects, it's just there's very few that are going to be coming online, let's say, even in 5 to 10 years. So to be able to make it in, let's say, a 3 to 4 year window would be moving you up the batting order as far as copper supply coming on that's so dearly needed by the market. Let me ask you, it's a pretty big resource now, George, 11 billion pounds of copper, but there's still probably room for expansion. I mean, you really, MainSpring, just remind people listening, that's really something you just started drilling a year or two ago. So how much upside is there to still keep exploring and expanding the resources? Are you going to be doing any additional drilling?
Well, there's certainly more room for finding additional resources. We know that between Parks-Salyer and the Cactus West, the old Sacaton mine, there's 1 kilometer of strike length there, which we call the gap zone. It's never been drilled to depth or below 1,000 feet, 300 meters below surface. And there's probably a high probability that there's mineralization there. And we know that northeast of Cactus East, we poked a hole in there probably a couple of years ago and got 990 odd feet of continuous mineralization around about 0.42%, which is certainly mineable from an open pit perspective. So the likelihood of finding more resources on the property is very, very, very high. I would, however, say that with a 11 billion pound resource now, our focus going forward is going to be very much on infill drilling and less on expansionary or pure exploration. I think we've probably got a large enough resource now where we can have a multi-generational mine with a world-class asset and very strong, robust economics. And of course, we don't want to be raising money and putting it in a pure exploration at these ridiculously low share prices. So, every dollar we raise really has to give us a return on investment. And right now, I think that is infill drilling and moving this thing into M&I and getting the technical reports completed, ready for a financial investment decision.
Yeah, it makes sense, George. It's already big enough, 11 billion pounds of copper. And I
Yeah,
just wanted you to
exactly.
highlight that there actually is a lot more exploration upside when the time is right. But it's big enough now, like you say, to stand on your own 2 feet with just the project you have, even if the Newton wasn't even a factor. So it's already a world-class project now. So congratulations again. But you mentioned the plan now is, really the delineation of the deposit, the infill drilling, but also all of the work you're doing to work to these economic studies. You mentioned some of the column testing you're doing. What other work is the team doing behind the scenes that's maybe not as exciting for investors, but it's important to move the project forward and continue to de-risk it?
Well, certainly engagement with the community is very, very important. We've been in dialogue with the community for, the 5 years that we've been there. We've got a very strong social license, but approximately 3 to 4 months ago, when we started to realize, after we got the internal resource on MainSpring, which was in, late March, we started to realize the implications of that. And we'd already been speaking to the city mayor, the council, key people within the community about this much larger business plan that we would be presenting to the market sometime in the next 6 months, so nobody's sort of caught offside or blindsided. And the same goes for the regulators. So we've been in dialogue with ADWR, Arizona State Lands Department, the Arizona Department of Environment and Quality, ADEQ, so that they're not caught off guard with this big uplift in the production plan that we're about to show in the next couple of weeks. And everybody's on board with what we've shared with them up to now. So, social license, keeping the regulators informed, and obviously continuing to work on the permits that we're going to require are kind of things that go on in the background, but are obviously very, very important to putting this mine into production.
Well, George, a lot going on behind the scenes there to keep de-risking it, moving it forward, social licensing, the permitting, the metallurgical testing, infill drilling, a lot going on with Arizona Sonoran Copper. But I would like you to maybe summarize it for people. Now that you have this updated resource out, how does this stack up in the field of copper projects out there that are in development, that actually are near development? But also, what other key points would you like to leave investors with today? Just how should they think of Arizona Sonoran Copper now moving forward?
Well, certainly, I'm sure everybody's aware that immediately south of us, we have Santa Cruz, which is part of Ivanhoe Electric. They currently have a market cap of 2 billion Canadian dollars, or about 1.4 billion, I think, US dollars. With this resource that we put out now of 11 billion pounds of copper, it actually now exceeds the Santa Cruz deposit next door, which is sitting at just slightly north of 10 billion pounds of copper. So I would say that the little brother has grown up significantly now. And here we are today. I think we have a market cap of only 160 million Canadian dollars. The other company that you might want to compare yourself to would be a Foran Mining. Obviously, they're advancing their project at McIlvenny Bay. They just announced the big project financing. The resource on that is barely 2.5 billion pounds of copper in the ground, equivalent pounds of copper in the ground. And yet they have a market cap 4 times significantly greater than our own. So I would say that Arizona Sonora is very, very undervalued. And if listeners are looking for junior copper in developers in very safe jurisdictions that are very low risk, I would put Arizona Sonoran at the top of the list as far as an investment decision is concerned.
All right, good point there. A lot of room for re-rating higher based on the size of this resource and what's out there that's already getting much higher valuation. So wishing that for you and the team, George. And we'll keep following along with the news here at the KE Report. When you get the PEA out in a couple of weeks, let me know. We'll get you back on and update that. And if people listening in want to follow along with the news at Arizona Sonoran Copper, definitely click on the link below this interview. Takes you right over to the company website, directly to their news section, so you can follow along as well. And George, looking forward to our next conversation.
Me too. Thank you, Shad.